Hello everyone. In this session, I'll be discussing about the budget 2021, the basic classification of the budget, and also the recent reforms and initiatives taken by the government of India. We know the term budget, it is nothing but an estimation of the income the government is receiving and the expenditures over a period of time, that is basically in a one financial year which starts at 1st April and ends 31st March. So to classify budget, that is in the revenue budget and the capital budget. Here you need to remember a very important term, that is asset. Asset is nothing but a property. Asset is nothing but an investment to purchase a property. It can be a bond, it can be a share. So whenever government is spending out of its pocket, then if that spending is making an asset, then you will be considering under a capital account. Anything which is not creating asset, that will be considered under the revenue account. For example, government is spending from its pocket and that has created an asset. Example, it has invested in bonds. It has started making an expenditures for establishment of new hospitals, schools, etc. So that will be considered as an asset as part of capital expenditures. And out of these assets, if you are earning any returns in terms of profits, in terms of rents, in terms of disinvestments, if you sell off those assets, then whatever you receive, you call that as receipts and will be considered as part of the capital account. So anything which is related to asset will be considered as an capital which you receive or you spend, and which is not creating any asset will be considered as part of your revenue account. So in revenue account, we have revenue receipts and the revenue expenditures. Anything government spending from its pocket which is not creating asset, example, salaries of the employees, pensions, scholarship, subsidies, plans, programs, schemes. This are those expenditures which do not create any asset. In that case, we'll be considering them as part of the revenue expenditures because those are being spent out of the government's pocket. If something government is receiving without a role of asset, then you call that or considers that as part of your revenue receipts. For example, government is receiving from the taxes. Government do receive from non-taxes, but these taxes and non-taxes do not create any asset or they do not have any role of assets. So these are the general entities which are levied on their earnings or the profits or the penalties or the fines. So that's the reason these do not create any asset, then this will be captured as part of your revenue receipts. So we further classify them. So revenue account and the capital account. So revenue account, revenue receipts and the revenue expenditures as part of the revenue account. Then in this case, we have taxes and non-taxes. So in the recent budget 2021 to 2022, government's expectations are very high from the taxes. That is, it is going to earn more from the GSTs. Whether it is indirect or direct, it will be considered as part of the taxes. So government's net tax revenue will be very higher when compared to government's net non-taxes revenues. That means the net taxes revenue are somewhere around 15 lakh crores and the non-net taxes, that is net non-taxes, will be around 2 lakh crores. That means obvious 15 is greater than 2. That means what the government is earning from the taxes is very high when compared to the non-taxes part. And when government, we are talking about the expenditure part of the government, that what is the government is been spending when you consider subsidies, salaries, pensions, interest paid on the loans. For example, government has taken loan and it is going to pay interest on those loans. That is part of the government's expenditures and will be considered as part of the revenue expenditures. The main important term which you have to remember here is assets. If you are having a role of assets, then you have to keep that asset part as part of the capital receipts or the capital expenditures. Now we'll break down into the first half, that is the revenue account, and look at this recently 2021 and 2022 budget. What is the government is expected with? Government expects, that is the 1 rupee which government is earning, where does it come from? The most of the government's returns are being expected from the borrowings. So the 36 paisa government out of this 100 paisa is borrowings and other liabilities. So these borrowings can be internal borrowings or the external borrowings. If you're talking about the internal borrowings, these internal borrowings will be from within the country, that is within the territory, that is either from the RBI or directly from the market. Or if it is external borrowings, the government is borrowing from the any external institutions, like government borrows from Asian Development Bank or the BRICS Bank or New Development Banks, any of the other sources. But what government borrows from the internal market is very high when compared to the external market. Now, government's taxes, that is as part of the revenue receipts, how much is government earning? Government earns maximum from the GST, that is 15 paisa out of 100. Next comes the income tax, corporate taxes, excise, and finally the customs. So this could be your preliminary question. Like the first will be government's net tax revenue is very high when compared to net non-tax revenue. And in net tax revenue, that is the direct taxes and the indirect taxes, government earns together. If you consider, government earns majorly from the GST. Next comes the income tax, corporate taxes, excise duty, and the customs duty. So when you talk only about the direct taxes, government earns mostly from the income taxes, which is much greater than the corporate taxes. And out of only specifically indirect taxes, then definitely government is earning very high from the GST. And overall, if you take direct and indirect, definitely government is earning very high from the GSTs. Now, apart from the government's earnings, I mean, like apart from the government's earnings, what is the government earning from? That is from the taxes as well as from the non-taxes, which is majorly direct or indirectly, whether it is the income tax, corporate taxes, GST, etc. Apart from this, government do earns from special entities like cess and surcharge. So we'll study about what is this cess and what is surcharge. So we'll talk about surcharge first and cess later. Surcharge is nothing but a special tax which is being added on the tax. We can call it as a tax on tax. That means which is not levied directly on your income or profits, rather it is levied on the tax. For example, you earn 1 crore as your income and you need to pay an income tax on your income of 10%. That means it comes around 1 lakh. As your earnings are very high and you fall into the highest tax slabs, government says you are eligible to pay even the surcharge. So you are liable to pay the surcharge and government levies 10% surcharge for an example. So surcharge will be not on your income. Surcharge will be on the taxable amount which you are paying. That is on the 1 lakh. If you apply 10% of surcharge, it is around 10,000. So the overall tax you pay to the government is 1 lakh 10,000 out of your earning, which is 1 crore. So this is the concept of surcharge. Surcharge is been an additional tax, which is a tax on tax, so that in order to maintain neutrality in the market. And if you are from the middle groups, then if you are from the middle earning groups, you do not fall into the levies of this surcharge, and but you are eligible to pay definitely cess but not the surcharge because your income levels are very low. Government has come up with surcharge concept where it has added social welfare surcharge. These are those entities which you levy on the imports of certain high value goods. If you import anything from the out of the market, I mean like from the international market to the Indian market, on which government is going to add a surcharge. That means when you import, you are eligible to pay customs. On this customs, the value which you get it as a custom duty, on that you need to pay surcharge. Now what is the other spending? I mean like what is the other earnings the government is getting from, that is from the cess. Surcharge is a general purpose, and when you talk about cess, cess is a specific purpose. That means government has some intention. Based on that intention, government is trying to collect cess from you as a tax, and it is for specific purpose. For example, government feels that education needs to be given higher importance. I need to construct schools. I need to construct few hospitals. Then government can come up with a specific cess like entities, and it will charge on certain goods or certain commodities or certain services only, and it will try to collect the percentage of cess, and it will be using those cess amount only for the specific purpose only. But if you levy surcharge, you can use it for any purpose, like a general purpose what you use as a general tax. But cess, you have come with an intention, then you are applying cess only for that intention, and you will be utilizing cess only for that purpose. Once your purpose is met, that means cess is temporary, because once your purpose is met, you are going to abolish it. You can easily abolish it once only when your purpose is served. Now, cess and surcharge both put together, central government has an exclusive rights, whether they can share with the state governments or not. It completely, it's an opinion of the central government. So government has come up with different says like Krishi Kalyan says, agricultural says, health and education says, Swachh Bharat says. So these are again tax on tax. When you pay income tax on income tax, you will be paying 4% of health and education cess. If you dine in a hotel, you will be paying Swachh Bharat cess in your institutions or in your hotels. So recently, government has come up with agriculture infrastructure and development cess. On this, government thought and institutions or any sort of infrastructure development activities needs to be taken for building an agriculture in our country, then government is going to levy cess on this petroleum, that is on petrol, diesel, where you get added with an excise. On this excise, I'm going to add cess. So cess is not directly on what the value you pay for petrol and diesel. Rather, it is the amount which you pay as an excise. On that excise, you are going to add cess. That will be very nominal amount. And if you are importing any medical equipments, I mean, like if you are importing any high value medical equipments, imported medical devices, then 5% health cess will be added. This will be utilized for building hospitals at aspiration buildings. That means like in major areas like where you feel some backward districts, you need to develop them, then you will make use of this 5% cess to develop hospitals or any other infrastructural activities in those areas. Now, where is this rupee is being sent? If you look at the classification of the budget, we spend, I mean, like as part of the revenue expenditures, where the government is spending, which is not creating any asset, because any term which is creating asset will be considered as part of the capital account. But here government is spending out of his pocket, which is not creating any asset. That means subsidies you give it for the BPL families, for weaker sections, or for agricultural inputs. For this, you are not creating any asset, so that will be part of your revenue account. It will be considered as an expenditure part only. So subsidies which you give it, salaries you pay, pensions, interest you pay for the loans which you have taken will also be considered as an expenditures, and the scholarship which students get it or the aspirants get it will also be considered as an expenditure, which is not creating an asset. So where does the government spend more? I mean, government is spending more on the interest payment for the loans which it has taken. So where the rupee is being sent, rupee is being spent on the interest payment, like 20 paisa you are paying, out of 100 paisa, 20 paisa is you are paying for the loans. I mean, like which you have taken on those loans, you need to pay interest. So 20 paisa goes for those interest. And the most important is next one will be the grants. Third one will be the subsidies. Now look at this very important term, subsidies. That means out of 100 paisa, you are paying 9 paisa as part of the subsidies. So major important subsidies what the government gives as part of its expenditure will be the food subsidies, fertilizer subsidies and LPG subsidies. In your preliminary examination, such kind of question might be asked like on the expenditure part, which is that subsidy which is being given high most expenditure part, that is the food subsidy. Food subsidy is somewhere around the highest part out of this 3 lakh crores, and second comes the fertilizer subsidies, and third one will be the petroleum subsidies, that means or fuel subsidies, where government is supporting you with certain schemes, pradhana mantri ujjwala yojana, which is like pahal schemes where government supports like providing certain amenities to the BPL families, and also such other subsidies where you would have taken loans and government wants to go for the mafi, that is runa mafi, that waiving off. So such schemes will be also be part of the subsidies. Hence, you will be given subsidies, and that will be part of what the government's expenditure, which is not creating any asset. Now, where the rupee is coming from when we consider about the capital account? Capital account, we have the capital receipts. In general, you have to remember there is a term asset which is linked to the capital. So receipts is on this capital, you are getting some returns. And expenditure is something like on this capital, you are spending from the government's pocket to create an asset. So how do you create an asset? You make investments for investments in bonds, investments in gilt edge securities, investments for constructing hospitals, infrastructure, etc. And if the government has also given loans to someone, you will not give a loans free of cost. Rather, you will take certain assets as collaterals. Then there is a role of assets. So then in the loans given will also be having a role of assets, which will be part of capital expenditures. Now look at this capital receipts. That means disinvestments do have a role of assets, because when you sell off bonds, sell off government gilt edge securities, you sell off any other investments like public sector undertakings, you sell off those shares. So there is a role of assets. So here, these are those assets which do not create any debt. If you take capital receipts, if you take capital receipts, that is what government is receiving. So government is receiving, government can receive in loans, government can receive in non-loans, which are not part of loans, but that are considered as an revenue. If it is loans, then government needs to pay interest, and there's a role of definitely asset. So if it is a loans, then we'll be considering as part of the government is borrowing. The government borrowing can be within the country, that is internal, or outside of the country, which is external. So remember a very important preliminary question, that the government borrowings are very high from the internal when compared to the external. So this I have already covered in my earlier slide. Now these are the borrowings which creates debt. These are the one which creates non-debt, because disinvestments, government is selling away its stakes and government is getting a revenue in return, so this cannot be considered as debt. So non-debt, these are nothing but the non-debt capital receipts. So these are non-debt capital receipts where the government is going to receive in this financial year, that is around 5 paisa out of 100 paisa. And apart from that, what the government is borrowing, how much the government has to give to the state from its tax pools, and what are the grants it is going to assign, everything will be covered on part of this 36 paisa. As part of the capital expenditures, anything which is government is spending, which is creating an asset, will be part of the expenditures, that is the capital expenditures, which will be included as part of the investments or the loans given. That means government would have given loan to any of them, whether it can be internally or externally. So this is where the government is spending its money. Like government is spending majorly on the interest payment. That means you have taken loan, on those loans you need to pay interest, which can be internal or the external. Next one, state shares. That means based on the 15th Finance Commission recommendation, 42% is what you have to give it to the states out of your taxes, and Out of 42, 1% will be given to the newly formed UTs, that is the Jammu and the Ladakh. The most important of the where you are spending will be the subsidies, which we have already discussed, and 9 paisa will be as part of the central sponsored schemes, and 13 paisa will be central sector schemes. We'll be discussing this in the next coming slides. Government has come up with the new expenditures, that is as part of the reforms, that is Metro Light and Metro Neo, and this will be for the technological advancement for the low cost metro system in the small cities. And by 2022 dedicated freight corridors will be completed, and as part of the target 2023, 100% electrification of the broad gauge routes will also be as part of our agenda, and national rail plan for India will be ready by the 2030. So government has come with a very important strategy, that is identifying few strategic sectors. So what are those strategic sectors? Strategic sectors are those sectors which have a key role in our economy. That means crude oil, power, steel, telecom, banking sector, transportation, clear, insurance and financial services are all part of the key strategic sectors. So government keeping one minimum government company and the other, I mean, like they try to come up with the one or two banks or one or two PSUs or one or two sectors, and the rest of them will be privatized. That means the rest of them will be part of non-strategic sector, majorly which are the important will be part of which whose health as part of the revenue is very high will be considering as part of the strategic, and the other part which are consider as a non-important, which we consider as a non-strategic because of their health. And government is also planning for the privatization, which means it's talking about the disinvestments, which are nothing but the strategic disinvestment policies. Now, we spoke about the schemes, how much government is spending on the schemes as central sector schemes and also centrally sponsored schemes. Central sector schemes are those schemes where government has 100% expenditures on its sides, and centrally sponsored schemes are those schemes where government, that is the central government and the state governments, will be sharing. For example, in the central sector scheme which government 100% is responsible in the expenditure side is the PM Kisan, Pradhan Mantri, Atmanirbhar, Swachh Bharat Yojana, such schemes where government is 100% responsible. And in centrally sponsored schemes, we have core of the core scheme. Core of the core schemes are those schemes where which makes a lot of impact in the society. Maybe examples like Manrega, or the examples where with respect to employment, with respect to SC/ST schemes, with respect to minorities, government has come up with the new program which will be considered as part of the core schemes. And core schemes like the smart cities, Jal Jeevan Mission, Swachh Bharat Mission 2.0, so these are considered to be part of the core schemes. Now, if a state is having a special status due to its geographical location where development activities will take a lot of time, so in such cases, government, if it is centrally sponsored scheme, which will be shared, that is on the 90 is to 10 basis or 60 is to 40 basis if they are a general states. And along with this, government has come up with few new schemes in 2021 budget. That is nothing but the PM Atmanirbhar Swachh Bharat Yojana, which is for building a health infrastructure, and also Jal Jeevan Mission for the urban, which is for providing universal water supply to all the cities. And finally, it has come up with Urban Swachh Bharat Mission 2.0, which talks about focusing on the air pollution, clean cities, clean technology, e-waste technologies, and also reduction of the plastics. We have discussed the most important schemes in the budget. We have classified the budget, and also we have studied about the cess and surcharge. We made use of how the government is spending the pie diagram which explains from where the government is earning and from to where the government is spending and to where the maximum allocations has been given as part of the expenditure programs. So this session I hope is going to help you for your preliminary examination. Thank you so much.